We've just seen a massive buy the dip. We're getting a huge amount of volatility. Crypto's been all over the place. Can you give me a health check on where the retail buyer is right now, the retail trader? What are you seeing in the market?
Well, I think if the third quarter was any indication, Guy, what you've seen is the retail trader pull back a little bit, right? I mean, the volume was down. The engagement was down. I know we saw that in Robinhood's numbers and some of the other numbers that came across the tape. So I think anytime you see violent swings in the markets the way that you have, it makes some of the retail investors who got in thinking this was, or being led to believe in certain cases, that this was easy money, right? And it's easy to get in and ride that train up. It goes both ways. So when you see violent swings in the stock market, the way we have the past couple of weeks, and then even if you look at this weekend in cryptos with what went on in Bitcoin, right, that $10,000 drop, it definitely makes the retail investor sort of step back and pull out for a moment, realizing that they can lose everything they just put on the table.
Hey, Karl, I have to wonder, though, how long that lasts. Because, the December moves, to me, I don't believe them until mid-January. Sort of the Santa Claus rally, then you sell again in January. I mean, it's a whole different philosophy of trading than it is for the rest of the year. Could these guys just literally be on vacation?
So I don't know if it's on vacation as much as it is a changing situation, right? You had a giant increase in interest and desire to trade during the pandemic when folks were locked down. They had nowhere else to spend their money. They had extra savings. They'd put money aside. So, hey, look, the stock market's coming back, reopening trade. Let's go into some of the short squeeze plays. Let's get involved in one of these things that we believe in, like a Gamestop or an AMC, right? And let's get into one of the meme stocks. I think now it's about sort of a great rationalization, if you will, right? How do we ride this for the longer term? Because many of them thought that the market would just continue to go up, and now you're seeing a lot of them pull back. So I don't know if they're necessarily on vacation. I think they need to find other ways to engage in the market that for some of them are going to tend to be less risky, right? How do you go for that longer term rather than just the quick kill?
Yeah. So what does that mean for platforms like Robinhood? If this is a new approach to trading the market, maybe a little bit more cautious, maybe a little bit more long-term, maybe a little less frenzied, what does that mean for Robinhood? Is this a different approach that needs to be formulated by management?
So I think you're right on the mark, Guy. I think what we look at when I think about Robinhood, I think about the customer acquisition machine that they've been, right? The growth that they experienced over the course of the last 2 years in terms of their customer base going up to as high as 22, 23 million accounts, whether or not those are active users or not, you can debate that. But what they've been able to do with opening accounts and getting those folks on their platform has been nothing short of stunning. But their business model is based on entirely generating trades, right? How do you continue to have these folks engage with the marketplace? How do you get them to continue to trade? How do you continue to generate that payment for order flow on the back end so that they can continue to invest in their platform and grow? They need to find a new way to engage with the customer. And if you look at what they said on the last earnings call, right, that's exactly what they're trying to do. Get into longer term investing, get into education. They talk about some of the snippets that they now have available. I think they refer to them as snacks, right, online, and how they're getting their customers to engage. They've started with 24/7 customer service. So, really sort of thinking about their longer term business model. But I would just say, if you take a look at the way the stock has performed, the street is scratching its head a little bit because they were getting paid for massive growth. And now it's about re-engaging those customers and figuring out ways to monetize those relationships.
Karl, do you get the sense that the big ball of retail money is going elsewhere? Like, is it sitting in cash? Is it dabbling in other assets? Is it less about the trading and the options? What's your take on that?
So I don't know, in terms of volume, right? For me, it's more trading volume than it is the amount or the size and scope of the assets that are held in these accounts. Because I think when you peer through what's gone on in some of the Robinhood-like accounts, they aren't large account holders. They're just people who trade. Right, so they might trade one share, a fraction of a share, but they're constantly, in and out of those stocks. So I do think you see some pullback. I do think you see some people getting onto the sideline and thinking about where they go next with their dollars. But for the most part, for me, it's more about the lack of engagement that you're seeing because, look, trade, it goes both ways, right? It can go up and it can go down. And I think that's what the last couple of weeks have really shown these folks again.
Karl, what does it mean, therefore, for stocks like GameStop, AMC. GameStop's going to be reporting numbers later on. It is a tough world for GameStop. The reality of the operating environment it has to cope with and what we've seen in terms of the share price feel completely like they're on different planets. Are we now going to see stocks like GameStop reverting to fundamentals if we are seeing this new approach being taken by some of these retail traders?
So I think there's a difference, Guy, in terms of some of these meme stocks, and some of them are out there. The GameStops of the world, the AMCs of the world, right? You can call the folks who are engaged in those, you can call them apes, you can call them the new market entrants, you can call them sort of the way the new market behaves. They believe in these stocks for a reason. It has nothing to do with fundamental valuation, right? If you look at this on any basis, a company that's projected to lose 52 cents this quarter, right? That's sort of the four analyst estimations that are out there. And they're trading at these valuations at $13 billion approximate market cap. There's something else going on behind the scenes here. And so this is a group of people who see value in GameStop. They see value in AMC. It's the same thing in NFTs and in some of the cryptos. That value is ascribed to them, not based on valuation methodology or mechanics. They're based on belief, right? It's what these people believe these stocks are worth. So I actually think the meme stocks and the folks who are engaged in those in the Wall Street bets of the world, I think they're here to stay. I think you might see this trade off a little bit if they don't give more information, GameStop, around their future plans and prospects, right? Will they get in more heavily in the NFTs? Will they announce some more strategic plays around what they want to do on the e-commerce side of their business, right? How do they continue to build that? That may drive them here or there, but the folks who are engaged in the meme stocks and in cryptos, they have a different sense of value than, sort of the old school valuation methodologies that we've all used.